Okay, folks, welcome to this lunchtime webinar. I think there's a few more possibly going to join us, but I am conscious that lunchtime is roughly an hour, so I will get cracking. There's about 150 of you registered to come to this webinar today, so clearly we've hit on a popular topic, and it's also worthy of note that every single day this year, every single working day this year, the SRA have approved nearly 2 new law firms to be opened. So there's a lot of you out there starting out again, looking to set up your own law firm. So I think we've hit on a pretty good topic. If we just have the next slide, please. Just a few housekeeping points. There's no fire drill planned at my end today. My mobile phone is on silent. However, if you do want to pop into the kitchen and make yourself a sandwich or make yourself a cup of coffee, we are recording today's webinar, and we will send you a link at the end of today during the course of the afternoon or early tomorrow morning to give you a copy of a link to the recording. And the other thing we've done is put together a 15-step guidebook, an ebook, and we will send you a link to that ebook at the same time for you to reference, and that will cover more material than we can share with you in just an hour. On the same subject of housekeeping, if we just pop on to the next slide, please. Those of you who are not familiar with GoToWebinar, there's a little panel, should be a little panel on the right-hand side of your screen. If you do want to pop in a question or two, by all means do. Just click on the question button and a little box will appear and you can put in your questions. We have had a number of questions from people already. The panel that have seen those questions, and we're trying to make sure that they're covered. But if you want to put in an extra question, then please do so. Okay, so the next thing just to say to you is that I set up my own business 20 or so years ago. I was very nervous. I was very excited. I had lots of questions. I didn't always know who to go and talk to. So that's why I think it's fantastic the number of you have come along today to join this webinar, to start to put your hand up and ask the right questions at pretty much the right time. Okay, the next slide, please. Hey guys, having said all that, shit happens. You might not get enough votes, and you might have to sit in the corner quietly for a few years before you can have another go. Of course, if you do fail, and don't forget that for every law firm that opens, another one closes. So if you don't get it right first time, learn from your mistakes and try again. Some of you won't get it right first time, but do have a second go if you need to. Right, let's talk about the speakers. So I've got a fantastic lineup of colleagues here today to share with you their experiences. Firstly, very special guest on my left, on the right hand side of my screen at least, is James Brown. James and his business partner Sam Hall founded Hall Brown Family Law about 5 years ago. The two of them started. Today they've got 45 employees, a turnover of £4.5 million, and offices across the north of England. It's an incredible success story for James and Sam. James has got lots of anecdotes he will share with you during the course of this hour. Failing that, we will share with you his email address at the end of the webinar, and I know that James will be happy to receive a few emails from you to ask a few further questions. Then we have David. David is on my far right. David, just give us a wave so we know who you are. That's fantastic. Thank you, David. David owns DG Legal. DG Legal, we're a consultancy firm that work closely with anybody from sole practitioner through to a magic circle firm, and has pretty much seen it all. If you want any help getting your SRA approval through, David's your man. Then we've got Joel Topham. Joel, give us a wave.
Hello.
Hello, Joel. Joel is from Sagars Accountants. Now, Joel is not any ordinary accountant from just down the road. What makes Joel different is that he has been working with law firms for 15 years now, and he and his team at Sagars really do understand legal and the legal world and legal accounts. And if there's one thing you take away from this webinar today, it's make sure that you use an accountant who knows legal. That is your first tip to write down and take away. So then there's me. My name's Julian Bryan. I'm the Managing Director at Quill. Quill works with some 7,000 legal professionals through our software. We provide that through providing the most practical legal accounts and practice management software you need to keep your new business on the straight and narrow. We also know and understand legal cashiering. We're probably the largest gang of legal cashiers, payroll clerks, outsourced typists to help you get on with what you know best, and we'll take away that back office function from you. Okay, next slide, please. So as the four of us have been getting together, I think we see these questions of what do I do? Where do I go? When do I do this? Why am I doing that? Who should I speak to about this? And how do I do about something else? So this webinar is aimed to try and answer some of those questions for you. And hopefully by the end of this webinar, by the time you've read the ebook, you're going to get, if we have the next slide, please, you're going to get some practical outcomes on what it takes to start a law firm, what mistakes to avoid, how to get some PI cover, get your SRA approval, tackle that area of compliance, manage your finances, who to turn to for advice, and some real tips and tricks on how to succeed. Right, let's get started. Number one, the first thing to do, open a business bank account. Well, to me, that's easy. David, you're a practical man, you understand these things. Is it as easy as just popping down to the bank and filling in a few forms?
Well, you know, until this year, it certainly wouldn't have been step one. It probably would have been one of the last steps, I would have imagined. But because of the pandemic, I'm afraid that it's incredibly difficult to open a business bank account at the moment. Most banks are simply not opening business bank accounts, I'm afraid. And if you ask them why, they say that it's for operational reasons, that they have been inundated with requests for new bank accounts, for bounce back loans, etc. And they simply have a huge backlog. So for example, I spoke to Metro Bank a few days ago, and they said they're not opening any new accounts until the new year, even for existing customers. Barclays, the picture is a little more positive, but they're quoting a turnaround of between 12 and 16 weeks. So it's for that reason that we put this as step one. Now, I think if you were really seeking to start a new law firm, your best bet really is going to ask your existing bank, the bank that you have a relationship with regard to a personal account. That would really be your best step. And if they can't help, then perhaps then move on to somebody like Barclays or phone some other banks where you may have contacts, etc.
Okay, thanks, David. So it's use the people that you know, and if you're really stuck, then have a chat with David afterwards, and he may be able to point you in the right direction. Quite a change from 12 months ago when opening a bank account was dead easy. But don't let that put you off. So if that was the first hurdle that you got over, let's assume we've got through that one. What about PI cover, David?
Okay, next slide, please. Well, you can't submit an application to the SRA for new firm authorization without the written promise of PI insurance. Now, a little bit like business bank accounts, we have been struggling a little bit this year. This is the first year in many, many years where we've struggled to get PI insurance for some firms. Now, this is partly because many insurers have met their targets and they don't want any further exposure. It's also because the insurance market is hardened. In other words, it's got more expensive, and some insurers have dropped out of the market. Now, a tip that I've got here is to, in your proposal, only practice in areas where you have a proven track record. If you're not able to demonstrate in your CV that you're a true specialist, insurers are not going to be interested. Another tip in relation to using brokers. There are many good ethical brokers out there, but there are also a small number of unscrupulous brokers. So be careful. And as Julian has already said, ask for recommendations. Another tip is, unlike car insurance, it doesn't pay to shop around too much. Now that may sound very odd and unusual, but let me explain. PI insurance, for the main part, is not automated, and underwriters use tables in order to work out premiums. Now, if you put yourself in the underwriter's shoes, if that person gets the same proposal from 4 or 5 different brokers, they get annoyed. And I've known many insurers decline to quote because they're not interested in dealing with the same proposal on 4 or 5 occasions. So I would stick with just the one broker to start with. If you're concerned about the broker's performance, maybe use a second one, but I wouldn't use more than 2 brokers.
Okay, right. So the bank manager's made us do the hurdles, and now the insurance company's made us do the high jump. What's next? So the business plan. Let's go on to the business plan. Joe, you're a man of numbers. What's your tips for putting together the business plan?
I have lots of different tips for putting together the business plan. Business plan can be quite daunting initially, especially if you've never actually done one yourself beforehand, but I actually find it quite exciting. The business plan is what you use to really set out what you want to do and where you want to be in the next 2 years, 5 years, 10 years, however long you want to put it out there. And it's really a key component to the initial setting up of your law firm, because when you go to the bank and you try to open a business bank account, they're going to want to see your business plan. And when you go to the PI insurer to get your first set of insurance, they're going to want to see your business plan. Same for the SRA. When you're applying to the SRA, they're going to want to see your business plan. And they're going to want to know what you're thinking of doing. They're going to want to see that you've thought about it deliberately. And they're going to want to know that you've got some sensible assumptions behind it. They don't want just a concept with no with no sort of a substance to it. I don't know if any of you have ever watched The Apprentice, but one of the favorite episodes of mine in The Apprentice is where they go through the business plans in the interview section. I remember a couple of years ago, a candidate called Solomon just had a business plan that was just a set of logos and a concept of what he was going to do and no substance behind it. And he got absolutely ripped to shreds by the interview panel. And that is exactly what you do not want. But equally, you do not have to have the most detailed line by line, 150-page business plan set out in your first before you even start trading. The best bit of advice I can give you when you're looking at your business plan is get help in those areas where you haven't had much experience. So nobody expects a solicitor to be able to put together a three-way cash flow balance sheet and P&L forecast, because that's an accountant's job. Nobody expects you necessarily to have a handle on every single bit of HR and marketing that you're going to be doing, because that's not necessarily your experience. Go and find experts who know those areas better than you do and glean from them what you need to get in order to get your business plan well backed up, and just equally to enable you to focus on what you are good at, which is delivering the legal services that you want to deliver. And then once you've got your business plan, then use it going forwards. Don't just do it once and park it, but use it. Set it up as a budget, as a forecast, and refer back to it as a yardstick as you're going through those first 3 months, 6 months. And also remember that the business plan is not just about numbers. It's about principles. It's about goals. It's about what you want to achieve. So it's not just about saying, oh, I want to get to turnover of X and profit of Y within 3 years. It's about setting out your values as a law firm. How do you want to practice? Who do you want to help? Who are your ideal clients going to be? Where are you going to find these clients, and how are you going to retain them once you've got them? All of those are different elements of the business plan, and there are a number of other elements that should go into your business plan. but it's just important that you get that set down at the start so you know what your direction of travel is going to be for the first 6 months, 12 months, 2 years, 5 years, 10 years.
Brilliant. Thanks, Joel. That's really, really practical. I'm going to bring James in a moment. James, you might be on mute, but I've got a comment to make first. I think it's what's very interesting, isn't it? Is that the dynamics of this have changed slightly compared with 12 months ago. And 12 months ago, we would have probably said business plan, then bank account, then PI insurance. These three things are all very interrelated. So you've probably got to have all these three strands running together. James, what did you do? How did you put your business plan together? Did you do it on your own? Did you get anybody else to help you? How did it work for you?
So we actually sort of used a variety of things. There's some great resources out there, you know, things like the book that you prepared, this seminar. But actually, we also spoke to people who've done it before to try and understand, well, what is it you did first? And actually, even attending, if you're attending today, then you're probably interested in starting your own firm, right? Otherwise, why would you be on it? And if you're interested in starting your own firm, probably in your own mind, you've already got a kind of a vision of why and what you want it to be. And actually, I would say that is the kind of genesis, the nucleus of what your business plan is going to be. So we tried to think of it as 3 sections. So one was, you know, the hard numbers. What do we think we're going to be able to generate? Why, where from? Because that's the look. It looks to me like there is an actual business here. And the next bit was, some people call it culture. Joel, I think, used the word values. Absolutely right. You know, what do we want to be externally? What do we want to be internally? And actually, a lot of that was what we didn't like at the place we were at. And that's as good a reason to sit and go, well, it's not what they're doing is wrong. It's just we'd like to do it a different way. And the beauty of that is, if you've got those values, the people who come to you because of those values will automatically be right because you'll share the same ones. And then the third bit was almost legitimizing it to ourselves, because still to this day, I feel like we're pretending and just being waiting to be caught out. And it was sitting and saying, right, we are specialists in a certain field. We know the marketplace. This is how we would fit, and gave examples of other firms. You know, bizarrely, it's not that you have to be a trailblazer. It's just as good to say, well, we know this works as a business because A, B, and C have done it in perhaps a different city, perhaps a different area. And then we just kind of filled in the gaps from there. We then ran it past a professional like Joel or David to say, look, is this right? Do you think there are any gaps? And stress tested it. We're lucky in that a lot of our clients are entrepreneurs. So I also relied heavily on them and my ex-clients, and ran them up and said, look, can I just run this by you? Do you reckon this will fly? You know, you've started a successful business. But look, there isn't a right or wrong, is there? You have a go at it, and it's actually easier than it sounds.
Okay, brilliant. That's good. That's good practical advice from somebody that's done it, and that's what's valuable from James's input. As David, Joe, any other comments on this, or are we ready to move on? David, you want to say another word there? I think.
Just one comment, and this is really more applicable once you've established your business and you've started to grow and get employees, etc. If there was a recipe for a really successful law firm, I think one of the key ones on my list would be to share the business plan and get others to make suggestions. So I can think of 2 firms where they've done that. There's one firm in the Midlands that have grown from 20 people to 250 people. And the managing partner says one of the reasons why we've grown is because every department has a marketing and business plan, and it's mandatory for all members of staff to participate. And the staff come up with some fantastic ideas that the partners would not have thought of. So yeah, that would be a big thing for me once the firm is established.
Okay, great. So again, I think one of the key themes here with your plan is socialize it with your peers who you want to work with, and in other industries, and that those peers may even be friends and family, and socialize it if you're in a bigger scenario with your staff, so that everybody is like-minded on this journey together. Because if you're not all on the same bus, moving in the same direction, then you need to pull in at the first stop and decant those that don't share that vision. Right, let's move on I want to keep this rolling, and the next topic is something that I don't wish to belittle, but I'm going to spend a very short period of time on this, and just make the point for the moment, and we can come back to this at questions at the end, that you know, falling foul of your compliance obligations is probably the quickest way of getting yourself shut down by your regulator. You can have the fanciest case management system in the world, you can have the prettiest website on the planet, but if, for example, you choose to finance your business from your client account, you won't be around for very long. We all know that. So I'm not going to go into any more of the nitty-gritty detail of GDPR and confidentiality and overdrawn client account and so on and so forth. We can come back to that at questions if you have time at the end, but do talk to the experts about that to make sure you get that right and have that professional advice on board. Okay, so you're now ready to take the plunge. You've done your bit in terms of your business plan, you've got your insurance certificate, you've got your approval from the SRA or whoever you have chosen to regulate your business, and you're ready to take the plan. James, tell us about those early weeks and months. What were the exciting things, and what were the scary things, and what would you do again, and what would you not do again? So give us an insight at that early. You can think back to that early time.
Yes, so we opened in April 16, right? And the problem is it had to move very, very quickly anyway, because the original plan was it was going to be myself and Sam. We were going to have, you know, a handful of kind of clients that were going to have this nice lifestyle business, play golf on a Friday. I mean, I don't even play golf, but I kind of like the idea of it. But actually quite a lot of clients were going to follow us, which of course was totally exciting, except for the fact that what we'd asked for permission for from the SRA, what our business plan had said, what our cash flow forecast had said, were now completely out of the window. So we'd had to rewrite those in the weeks running up, but it also meant we'd had to commit to extra resource, which of course, you know, was making us nervous, because you see all of this cash going out and you're not sure that anything's going to land, right? Now, kind of being absolutely honest and holding my hand up, two relevant points for us. One, both of our other halves have kind of decent, well-paying jobs. So we knew, worst case scenario, we were going to be able to pay our personal bills, at least for a period of time. And that's not always the same for everyone, right? So it's a slightly easier decision for us. Second thing is, neither of us spend anything. So, you know, you're looking at a man who's wearing a TM Lewin suit that he buys in the sale, and because I'm so small, I can get like the teen range, right? But what that meant is we both had cash. We didn't have to borrow money. We notionally allocated 50,000 each. That wasn't the setup cost. It cost us probably about 40 grand to do everything, and we took lots and lots of advice as part of that. But we also notionally set aside that as a pot, and we said we're going to give this a minimum of 12 months to see whether we can make it succeed. So day one perhaps wasn't quite as frightening for us as it was maybe for other people, because we knew we had the cash, we knew we had some clients anyway, and we knew we could pay our own personal bills. Okay, so I'm not going to kind of underplay that's not going to be the same for other people. Walking into the office on the first day is the most surreal experience, because you know it's your place, right? But all of a sudden you're like, shit, excuse my Quill terminology, sugar. I've actually got my own law firm. This is all a bit kind of frightening, but it's incredibly exciting. The first time the telephone rang, the first time you recorded time for yourself as opposed to someone else, was absolutely remarkable. The first bill being paid was astounding, because you're like, oh my goodness, we literally started 6 months ago with a blank piece of paper, and that has turned into, you know, and I don't want to sound like we're money obsessed, we're not, but that's the reality of a business. You can turn literally an idea in a blank sheet of paper into actual money coming into a bank account. Downside was the mice that we had in our, you know, serviced office. Downside that we had was obviously 24 hours after starting, we started getting mildly threatening emails from our previous law firm over everything from whether one client, it had been agreed they'd gone even down to the wording on our website and what the word instrumental perhaps meant. I mean, we had all of this stuff, and you're trying to juggle, everything else. We couldn't make the computer talk to the printer, which was a proper problem. Like now, we've all gone paperless now, but at the time we had a court hearing and we couldn't print a single thing out. So that was not ideal because we had to bring in a printer from home, and it would have been quicker for us to write it out, frankly, than use that printer. But what I would say to anyone on this seminar is the best trick that big law firms pull, and I do this to my own staff now, is trying to persuade you how impossible it is or difficult it is to set up your own firm. That's just not true. We are we're not setting up Amazon, are we? We've got bills versus a number of fixed overheads. It's not a difficult business from a business perspective. Yes, there's some compliance issues, but there's lots of guidance out there in places like Quill who are going to help you out with that. It's not difficult. If I can do it, you can do it. So what I would say to people is don't get put off by the stories. It's a lot easier than it looks.
Okay, brilliant. That's really good, helpful, practical advice, James. So if we just go back a step back slightly from the mice running around the service office, and we're now going to make our application to the SRA. David, you're a man that's seen many applications to the SRA. What practical advice are you going to give to people who they've heard James, they've heard how exciting it is, and James has made it feel quite easy from one perspective, but you've still got to get that regulatory hurdle through. So David, tell us a bit more about that, please.
Yeah, I think first of all, the SRA are a little bit more friendly than you might imagine. They used to be quite a fearsome regulator until there was a change of senior management around about 7 years ago, I think now, 6 or 7 years. And I think they are somewhat easier to deal with. I think the SRA are good if you're straight with them, if you're open with them, if you're transparent. It's if you're defensive and you don't engage with them, that gets their back up. And once you're on the SRA's radar, it's a little bit like HMRC. It can be a little difficult to get off that radar. So be friendly, be honest, be professional with them, and you'll find that they are relatively okay to deal with. Now, in terms of submitting the application, you have to submit a number of forms. So there's a form called the FA1 form, which is a form where you provide details about what the new firm is going to look like. There's also an FA2 form, which is for individuals. You use those forms to list and describe all owners, managers, and compliance officers. There are some exceptions when you don't have to complete the FA2 forms. There's jargon called deemed approved, which means that if you fulfill certain criteria, you may escape having to complete the lengthy FA2 forms. You'll need to also complete an FA10 form if you are conducting regulated business and you're covered by the anti-money laundering regulation. So in other words, if you do transactional work such as conveyancing, you would need to complete that form. But if you are giving, for example, family legal advice, you would be exempt from the regulations, and therefore you wouldn't need to complete the FA10 form. Now, after you've submitted the application, be prepared to answer lots of questions. Now, I think Joel has already said that you would need to submit the business plan. That's expected. Other documents are really optional, but our advice would be to, in order to minimize the amount of ping pong you play with the SRA and the number of questions you receive, it's really helpful in our experience to also prepare a business continuity plan. And I think we've all had our business continuity plans tested this year for obvious reasons. And I think it's also helpful to complete a risk register, so it demonstrates you've thought through all of the things that could go wrong with your firm and any actions to minimize, mitigate, or avoid the risks altogether. And finally, we like to, amongst other documents, also include a compliance plan. That really just shows that you've thought through how you're going to comply with the SRA standards and regulations. And the kind of thing you have to think about is, are you a paper type person, or do you prefer paperless? Do you prefer lots of lever arch files in your office, or do you prefer to use electronic software? That's the kind of thing you should be thinking about whilst you're formulating the application.
Okay, thanks, David. That's really helpful. Continuity, 3 things I've taken out of that: continuity plan, risk register, compliance plan. The little things around the edges that we don't all think about all of the time. And I think those little tips and in terms of those areas are really practical and worthwhile. Now, one of the questions that a lot of you have asked, who have registered for this webinar in advance, is about business structure. You know, should we be a sole practitioner? Should we be an LLP, whatever that is, or a limited company or a partnership? I haven't got a clue. Joel, you're the accountant. You should know the answer to this.
Yeah, well, there's a very easy answer for us accountants to give to this question, and that answer is it depends, which is a real get out of jail free card. But the truth is it does. So, I mean, we've got clients who are sole traders, including clients who practice as consultants under umbrella companies and under other support companies. We've got clients that are partnerships, we've got clients that are LLPs, and clients that are limited companies. There isn't a perfect structure for a law firm, but without sounding too cheesy about it, there will be a perfect structure for your law firm. And that structure will be dependent on a number of factors. Each different structure has different advantages and disadvantages. They have different tax treatments depending on which one you look at. You've got the potential to limit your own personal liability for expenses and costs should things not go to plan. And so you're talking with limited liability, you're talking LLPs or limited companies. In terms of tax treatments, sole trader, partnership, and LLPs are all taxed in the same way. You are taxed under income tax, under self-assessment. Limited companies are taxed under corporation tax rates. And if you've chatted to a mate down the pub, or if you would have chatted to a mate down the pub prior to lockdown, your mate down the pub will tell you that he's a limited company because limited companies are cheaper and more tax efficient. Which is not necessarily true. Limited companies pay a lower rate of tax than individuals do, but once the limited companies pay tax, if you want to then extract that money from the company, you then pay tax again. And actually the tax rates are structured so that actually there is a negligible difference if you take all of your money out from a company in the amount of tax that you pay compared to if you were a partnership or a sole trader. So but having said that, you can gain advantages through using a limited company, because if you are not going to withdraw all the cash immediately when you make it, then actually paying a lower rate of tax will help you fund your business and fund your growth in your new business at a lower tax rate than if you are doing it as a sole trader, a partnership, or an LLP. And actually, over the last few years, the direction of travel for new legal practices has been that we see more and more limited companies formed in the last 5 or 6 years than previously. The simplest structure to go into is a sole trader. You know, there's very little actual setup you need. You just need to apply to the SRA and say, I'm Joel Topham and this is my law firm. The only people you need to notify outside of the SRA are HMRC. But having said that, you've got all of your personal assets at risk as well if you are trading as a sole trader. So if things go wrong, everything's up for grabs from creditors in that respect. And the other real benefit of being a sole trader or a partnership is flexibility. So with sole traders, with partnerships, you can bring new people in to the business structure in a relatively easy way. And into business ownership in a relatively easy way. Whereas limited companies, there's a more formal application process you have to do. And if they're coming into ownership, there is some very technical accountancy work to be done around valuation of shares at the point you bring them in. And it can be, it's not impossible by any means. It's just a little bit more tricky. It requires a bit more thought so that you don't unwittingly walk into a tax liability that you don't want and don't need. The key thing that I always say when trying to choose your structure is don't look at the immediate future. Look at your mid to long-term goals, because they will helpfully determine what you actually want and what is going to be more important. Is it going to be tax efficiency, or is it going to be flexibility? You know, your mid to long-term goals could be anything from growing rapidly and building an empire in 5 years to growing slowly organically, and I just want to do things my way and take out a living that is enough for me. Or it could be, actually, I want to do this for 5 years and then I want to get out, or hand it over to somebody else. All those different decisions will help to determine which structure will fit your business better in the long run. And actually, you may actually find that you need a hybrid version. You might want to start as a partnership and then plan to become a limited company in 3 years' time. That is a good plan. It's worked for a number of our clients over the last few years. You may want to go the other way. You may want to start as a limited company and then plan to actually back out of that in a few years' time. That's slightly more complicated technically, but is still a valid option for you as well. There's nothing to stop you doing changing your structures midway through your plans. It just helps to have foresight as to what you're going to do and when you're going to do it. So the best thing I can say then is know your mid to long-term goals and then go and talk to somebody who knows what they're doing. You know, it sounds a bit self-serving to say that accountants are best placed on this, but we do this on a regular basis. But make sure that you go to somebody you trust who knows about structures and knows about the tax implications, and make sure you take their advice on what works best for you.
Brilliant. That's very comprehensive and very, very helpful, Jill. So it does depend. I think everybody on the webinar, it does depend. So you do need to think through. There is no single answer. You do need to think through what is appropriate for you. And I remember someone saying to me many years ago, Julian, your exit strategy is almost more important than your entry strategy, and I think you need to be thinking about that as well. So as you're getting your structure right, you need to be thinking about what is my plan for 5-10 years time. Am I in this for the long run or whatever? I don't know whether David or James have got anything to add to that. Any anecdotes? Nothing from either of you? James wants to say a word or two. James, you're on mute, I think.
So yeah, we went limited, having heard kind of all of the advice from our own sort of Joel at the time, and we went limited largely because we were very focused on growth, so we wanted to keep money in the business, and therefore money that we kept in the business we weren't going to have to draw out and pay tax on. Now there is a question mark because, of course, information is publicly available in relation to limited companies, which aren't necessarily with other business formats. So again, depending on how comfortable you are with clients being able to access that, staff being able to access that, bear that in mind.
Okay, that's very helpful. Okay, let's move on to some of the more practical side of things. And one of the unique things, obviously, about law firms and most disciplines in law firm is that issue of client account. The SRA at least changed the regulation slightly, where are we now, 18 months ago, in terms of the use of TPMAs, which I will let someone else explain rather than me. Joel, what's your advice in terms of managing client money, apart from not spending it?
Yeah, make sure you don't spend it unless you're allowed to. That's point number one. The reality is that most legal practices, most solicitors get involved with holding client money at some point in their career due to the nature of the work that they do. The single most important point is to make sure that you have read and understood the accounts rules in the current format as they stand. So at the moment, they were last updated 25th of November 2019. You need to have read them and understood them. They're not long. There's only 13 rules and it's only 7 pages long. It won't take you forever to read them. But I would also add on to that, get some formal training in relation to those rules, because actually a lot of the detail and a lot of the kind of the underlying basis as to why those rules are there and how they're supposed to be used is not actually in the rules anymore. It used to be. There used to be a lot more detail in them. But a lot of it now is contained elsewhere in the code of conduct, for example, or in previous legislation that is still enacted. And so because of that, if you go into it blind and just look at those rules, having not really paid too much attention to it previously, you're not going to get a full picture of exactly what your responsibilities are. So I would really encourage you to find some training, and there are several training companies out there that do specific solicitors accounts rules training that you can find. My next really key point is, remember, the accounts rules don't just cover client money and what you need to do with client money. It also deals with how you're supposed to look after the business account money, as it's called now, although I still refer to it as office money as we used to do. And so even if you don't actually need to hold money in a client account, you still need to be aware of these rules. And you still need to be aware of what you can and can't hold in your office account at what point, because you could inadvertently end up holding client money in the office account when you're not supposed to. So do be aware of that as well. Once you have a client account, unless you fall within an exemption, you will then also need an annual audit by reporting accountant, and you've got to organize that yourself. It's your responsibility. And more importantly, before you get to that audit, you must keep the records written up. The rules say keep these records written up promptly, and I can't stress this enough, you must do them regularly and accurately. You've got three choices as to how you do this. You know, at the start, you're always tempted to try and do everything yourself, and I would just not recommend that. You know, no offense to all of you looking to start a law firm out, but I can't remember the last time I met a solicitor who started his own law firm so that he could write up his own accounting records. That's not your motivation for doing this, so don't try and do it. Employ a bookkeeper in-house if you think you've got enough transactions to warrant that, or outsource it to a specialist who knows what they're doing, somebody like Quill, for example. And so, because in doing that, you can rest easy that your records are kept up the way that they're supposed to be. Just to share a little anecdote to put this home, we got involved a couple of years back with a legal practice that we hadn't acted for, who had just a support staff member who wasn't accountancy qualified in any shape or form writing up their accounting records, and had them being checked over by an accountant, but who was not a legal specialist accountant. And we went in there, and the records that we saw, the client account, there was a potential difference on it of £3 million. And this was a practice that turned over £500,000. So there was a significant issue there. Now, we basically had to reconstruct 6 years worth of client account transactions in order to prove, quite thankfully, that there wasn't any client money missing. It was just very, very poor record keeping. But the reality is that there was a significant cost to this. It took us 3 months of 3 people working solidly on it to do it. And ultimately, it probably cost the solicitor 3 to 4 times more than it would have done had he just employed a specialist to look after his records. And so don't be tempted to try and do this bit yourself. It's just not worth it. The only exception to needing to write up client records is what's called a third-party managed account, which has been brought in recently. It's not widely used yet, but you outsource the entire client account to this third party who manages it for you. It is starting to grow, but not for the entire client account. It seems to be used more as a transactional option. But it is available to you if you only have 1 or 2 transactions a year that need you to hold client money. And it can be an efficient way to reduce your liability on that respect. But at the moment, we're still not seeing very much in terms of take up of that option.
Okay, Joel, I'm going to take the chairman's prerogative of moving us along a bit. Otherwise, I'm going to get short of time. So I'm going to skip cash flow, folks. I think we've heard a lot about cash flow already, and I just want to say another word or two about your accounting, tax, and filing responsibilities. Very simply, you know, if you don't do these jobs on time, you are breaching your obligations under HMRC regulations or SRA regulations or Companies House regulations if you're a limited company. So make sure that you do fulfill your obligations. Go back to the ebook that we're going to send you out later on today for more detail. Talk to the experts in terms of David and Joel and co, and make sure that you fulfill those regulations, or use an expert. You know, outsource your payroll if you're employing people, because there's a whole bundle of requirements around the whole payroll process, RTI submissions, pension submissions as well. So it's not just about tax and SRA. Right. Okay. David, some people say, you know, it might not be relevant so much under lockdown, but you know, do I work from my bedroom, or do I work from my kitchen table, or do I rent an office and go somewhere? You know, any observations, you know, lockdown aside, in terms of what's the structure of the practical structure of my business?
Okay, well, of course, everything's changed. Until this year, the overwhelming majority of new firm applications were based around physical premises. Whereas since March, the overwhelming majority of the applications that we've dealt with have involved at least some working from home. And the pandemic has given people an opportunity to rethink their structures, perhaps move into smaller offices if they do have offices, etc. Now, previously, the SRA used to be a little bit resistant to home working in our experience, because they had concerns about confidentiality, but they've caught up. They accept now, of course, that people are having to work from home for obvious reasons. So working from home, or you know, a virtual practice, let's say, is accepted as normal now. But of course, the SRA will ask you how you ensure client confidentiality and what security measures you have in place to prevent theft, etc. And I could give you various examples, but I'm conscious about time, so I'm gonna skip that.
Okay, brilliant. Okay, so some thought-provoking stuff there from David on that. I think it is going to depend very much on how the new world looks once we get ourselves vaccinated. I'm lucky to be relatively high up the list, and hope to get myself a vaccination certainly in the next 2 or 3 months, all being well. So technology, and it was interesting hearing James talking about technology a while ago and trying to get his printer to print. So James, how much technology have you put into your firm? And are you one of these people that's got loads and loads and loads of case management systems and workflows or anything else, or have you kept it practical and simple?
No, so we had sort of 2 golden rules. Golden rule number 1 was, if we needed it and it was cheaper to outsource it, that it was cheaper than our hourly rate to outsource it, then outsource it. Second golden rule was, you don't need it yet, don't do it. Right, and we tried to sort of apply that every time we did it. So, for instance, we use, well, as you know, we use Quill, for example, for our payroll, for our reconciliations every week. And you know, the client account stuff that Joel was talking about is scary until people realise that if they use Quill, or an organisation like it, I feel like I'm on the BBC, there are, you know, every Friday a report lands from Quill that shows the reconciliations that have been done. There is a really frightening document entitled breaches, and God willing, when you open it, there aren't any breaches, but if there are, you can rectify it. So there is that much of a kind of weekly roadmap. And we said, right, well, it's significantly cheaper to use Quill than it would be for my hourly rate, and it might stop me going to prison, and let's face it, I would be popular in prison for all the wrong reasons, then you know, it's worth doing. But what we don't have, for example, is an incredibly complicated case management system. We do kind of high-end family law work. Everything we create is, you know, bespoke, if you want to call it that. So we still just use the Office suite for storing our file information, etc. What we did do, however, is use a cloud-based provider for all of our IT for 2 reasons. One, because of security, and of course, the SRA, quite rightly, as David says, are obsessed with that. And we use an organisation called Converge, who can guarantee that security and are Law Society approved. But the beauty about kind of using technology is the fact that you can scale it relatively quickly. You know, our office space because we've grown quicker than we expected, has probably been one of our biggest problems, because we outgrow a space quickly, and then it takes us ages to find someone new, negotiate an exit from one lease, enter into another one. RIT and Quill, for example, you can scale instantly, growing up from 2 to 44 people in, you know, a space of a few years. But what I would say is, one, if it's cheaper for someone else to do it than your hourly rate, use it. But two, be absolutely honest with yourself. You don't need it, don't spend on it.
Okay, James, that's very, very solid advice. Thank you for that. I think I would add from the technical side of things these days. You know, I remember joining the legal world 8 years ago, and people were very concerned about having their data in the cloud. It felt like it wasn't safe, and everybody wanted it on their pen stick or on their USB device or whatever, and carried it around with them. I think the world has changed. I know now that I am more comfortable with my data in a UK-based cloud provider domain than I am on my laptop. I don't trust my laptop as a data store as much as I trust data in the cloud. And of course, it doesn't matter whether you decide to work in the dining room, the kitchen, a spare bedroom, or in the office. You know, you can still access that data everywhere. And so I think that whatever you do as a gang of prospective law firm innovators, do get your legal practice management system and account system in the cloud. I think that has to be an absolute must. So I will very much endorse what James is saying. And absolutely, you know, you guys as lawyers are going to be earning, you know, or charging 150, 250 pounds an hour, depending on your discipline, and potentially more in some cases. You know, why spend that time trying to work out the payroll for your secretarial staff? Why spend that time trying to keep those laborious records that Gerald talks about, when you've got a number of different outsource providers out there that can provide that help for you? So I think we've probably got enough on the technology side of things. Now, one of the things that themes of this webinar has been very much around calling on the resources of your friends and your professional colleagues and so on. David, you're a great one for interacting and networking in various areas. What's your take on professional? Can we just move on a slide as well, please, before we do that? Thank you. Yeah. So David, on turning to professional advice when you need it.
Yeah, I think this has been one of the kind of themes that's come out over the last hour of finding good advice, and James spoke about this really very well a few minutes ago. I think it's really important to make sure that you get good advice. Now, one of the mistakes that some practitioners make is they will go to a conference, see an absolutely fantastic salesperson, and then go and instruct them. And in our experience, we've seen a few people on the conference circuit that may be great at selling. They may have a really large sales team, but not really that great at what they actually do. And they're not particularly good value for money. So the best way to find who the good people are is to simply ask for recommendations from people that you know in the legal world. And there's no better example of that, I think, than legal software and accountants. Let me give you an example. We've had several instructions over the past year where a law firm's got into trouble with the SRA because the SRA have realised that they've appointed a family member as a director. So, for example, husband, wife, etc. And the accountant has advised this because they said, you're going to save tax if you appoint your wife as director. Now, of course, the accountant wasn't experienced with legal firms, you see. And when we help to start a new law firm, we insist that the accountant they appoint does have significant experience of advising law firms, because it's a separate discipline. Accountancy is not generic when it comes to advising legal practice. You've really got to know your onions in this area. And if you don't, you're going to get into trouble. So you must instruct an experienced accountant in the legal sector. And likewise with case management software, I've seen lots of firms make mistakes. You know, they've been swayed by the marketing. They've signed a contract for a number of years, and then they realise they can't get out of this contract. You've just got to ask and ask and ask for recommendations, and maybe have a look around on the internet. Have they got positive reviews, etc. So yeah, that's my key tip when turning to professional advice.
Okay, brilliant. Thanks, David. I'm conscious that we're nearly at the end. Marketing. Now, James, I'm going to pick your brains here. You've gone from 0 to 4.5 million in a very short space of time, and you have a great reputation. I know that if I look around, I'm not planning on getting divorced, but I know that if I look around in that sector, then your name pops up all of the time. So how have you got your name out there, James?
So, firstly, obviously, like all of you guys probably, we were doing it, on a budget. What we did is we firstly said, well, hang on a second, where does our work actually come from? And we were really brutally honest with ourselves. Where our work comes from is referrals from existing or former clients. So 83% of our cases come from there. So we sat and we said, well, how therefore do we keep those people warm and keep ourselves sort of front of center in their minds, that if their friend asks for a recommendation or whatever it might be, but we need to do it cheaply. So firstly, do not underestimate the power of LinkedIn. Even across this panel, there are 4 of us talking to you, probably have several thousand contacts on LinkedIn, so that if one of you said, could you please post this out, please, you would send that message to thousands and thousands of people. Well, of course, as soon as you start employing people, they also have their own sets of people. So if you have any sort of a message, then make sure it's pushed out, not just by you on your LinkedIn and your Facebook or whatever it is, but by every single one of your employees as well. So LinkedIn, it's free, use it. It's also a great way to get around restrictive covenants if you decide to leave your existing. Not that obviously I would recommend anyone breaches their restrictive covenants, but it just is very, very useful indeed for that. 2, do things like enter awards. We did that all the time, and it wasn't to win the award, it's because it's free, and even if you only get shortlisted, if you don't win, you're still putting your name in front of 200 potential referrers, in the room. If you assume that people are going to give your name, and actually lawyers are still the most word of mouth driven business, make sure that they can find you. So that means, and it's not expensive, have a website, but it doesn't need to be all singing, all dancing, information about you, making sure you reassure them that you know what you're doing and it's easy for them to see that. So for example, we have scrolling Legal 500 and Chambers quotes so that people can be reassured that we know what we're doing, have an easy contact number, and finally spend whatever it is, 200 quid a month, which is all it costs, to make sure that your name comes up number 1 when they search for it. And I'm not talking about spending thousands on best family lawyer or best legal practice software provider. I'm talking about if someone says use Quill Pinpoint or use Joel Topham or use Hall Brown, if they punch that in, that it comes up number 1, that is not expensive. And that's really kind of all there is to it, other than if you do get something to shout about, make sure, the blog's on the website, you send it out on LinkedIn, you tweet about it, because it's all free, but make sure that if there is something to say, that you are saying it through all of your different mediums.
Brilliant, James. That's very very helpful. And of course, the other benefit of the awards is a night out at the Midland Hotel, or used to be at least, was always a great place to be. Right, folks. I am very conscious that that my minder, my producer, is shouting in my ear and telling me that I need to wrap this one up. We did commit to an hour, and I'm going to make sure we stick pretty damn close to it. So, in summary, I think the key points that we've covered and are also covered in the ebook that you'll get later is get that business bank account application in ASAP. Make sure that you are cute with your PI application. Get that business plan together and get those first three things working in sync with each other. Get your risk management process sorted out. Get some advice on that risk management. Prepare yourself mentally. That's really, really important in this day and age. Make sure that your SRA application form is filled in. Listen to the comments that David has made around that. Your terms of ownership, very much down to what Joel said. It depends. It depends on you and the way that you are structured in your own personal life. Client account, essential, well, not always essential, but pretty essential, or TPMA. Have a good think about that. Think about your cash. Cash is king at the end of the day. Tax and regulation stuff. You use your accountant, use a payroll bureau, whatever, for paying your staff, for making sure that you pay the right tax at the right time. Real versus virtual offices. Let's see how next year pans out as to whether you need a physical presence or a service office to meet clients in, if this lockdown business continues. Technology, don't overspend on technology, I think is the key message. Make sure you outsource wherever it's costing you less. James's comments there make absolute practical sense. This gang of people here in this panel, with James and Joel and David, are really practical people with lots of practical advice. And if you see at the bottom of the screen there, their email addresses: james.brown@hallbrown.co.uk, myself, j.bryan@quill.co.uk, david at dglegal.co.uk, and jtopham@sagars.co.uk. These email addresses will be sent to you later on. Engage with these people. They will really help you with your business. Now, before we completely wrap up, from Quill's perspective, just to say to you, and I think it's become very clear from the stuff that James has said, that Quill software will help you to manage at a very practical level your cases, your matters, your finances, and keep you organized. And we can also support you with our back office systems in terms of making sure that your books stay clean, so that your breach report at the end of the week is absolutely clear. So to support you with that, anybody that's been on this webinar, we are giving you a voucher worth £1,000 to help you set up the tech that you need for your law firm, and that voucher is available until the end of the calendar year. Right, folks, if we could just move on to the final slide, or the penultimate slide. Let's move on to one more. Yeah. So I think, and to the final slide. It all just finalizes with me to say thank you all for listening. We've had a big chunk of you here for today. I really do appreciate your engagement. I know there have been some questions. I can see there have been some questions through the course of the webinar, and we will get back to you with answers to those questions in the course of the next 24 hours. And of course, thank you to James, to David and Joel for being part of this and imparting, pretty powerful, strong advice to you as prospective law firms. And I'll just say good luck to you all in your business ventures. Thank you very much indeed for coming. Thank you.
Thank you, everybody.
Thanks, guys.
Good. Right, I'm going to do something that's going to finish this webinar.